Let's have a look at back to the markets then. Yes, of course, a slight bit of recovery from those days lowest point, but not meaningful though, because Nifty 50 is still down about 150 odd points, while Nifty Bank languishing in trade with over 300 points of cut. But a lot of earnings that are through, and let's take a look at KPIT Tech now, and let's understand more on that. We are being joined by Kishor Patil, CEO of KPIT Tech, joining us on the show. Very good morning, Mr. Patil, and thank you so much for your time. And firstly, on your earnings, if I look at the EBITDA margins are seen at 21%. The profit declined nearly 30% on a sequential basis. Can you explain the key drivers behind this, and how do you plan to address them in the coming quarters?
Good morning to you. I think the first, we are very happy that we have been in a position to manage our EBITDA and EBIT margins well. As you can see across the industry, these are the numbers which have suffered for most of the company. See, beyond that, I think there are two parts which has impacted the actual net profit, but I think it's a EBITDA and EBIT which remains the area of focus for us, because one important part is the currency movement, and that impacts this time. There were a lot of currency movements, specifically in euro and Japanese yen, and that's why that notional loss on that comes, at the end. And also the second thing, last year, if you compare it, I think the last year there was a one-time investments which had happened in one of our subsidiaries, that is a Corix, and I think that's again an accounting thing. So these were notional income that time, and I think what we are proud that in this kind of a situation we have been in a position to maintain our margin.
But Mr. Patil, you have highlighted your competitive edge in the mobility-specific AI solutions. Could you elaborate on this? How is this impacting the client acquisitions or the deal win rates? So also, what can we expect in the future?
And so I think there are three things which are happening. One is that globally the OEMs are in the middle of their programs, and they actually were supposed to deliver what you can call new architecture programs sometime next year, and some of them year after next. Now, most of the OEMs globally are behind in terms of their delivering on these programs. These are quite complex, and one of the big area for them is the validation, where they are struggling, and in many other areas, some of the technologies which they have adopted, what they want to see is whether it is relevant for the consumers today. So how they can put many features in the car today, so that it becomes some differentiated new features for the consumers. So I think this is an area where we can bring a lot of value and understanding, and that's where the clients are spending. And the point is, right now, due to the geopolitical tariff and multiple other uncertainties, overall people, the spend, they are not increasing. They are prioritizing in this area. And I believe as the certainty would come up in the next quarter or so, I think, and as our pipeline has been always strong for last, we have very strong pipeline. I think that will start, I would say, ramping up from that point of onwards.
Kishor, now with the 62.5% of business, which is on fixed price basis versus the 59.6 in Q4, are there risks of margin compression over time? And how is it that you will balance it if you do run that risk?
Overall, actually, if you look at it, this is a very conscious effort from our side to move to fixed price. We would like to go to 75% in the next 18 months. Earlier if possible. The point is our margins in the fixed price projects are higher because we take the overall ownership of the program, and that's what clients want. The second thing is we can use, as you mentioned, about our platforms which we can bring to the solution. Also, we can use AI. As long as we can take the end-to-end ownership, applying these kind of accelerators, applying this kind of technology and tools, proprietary, makes it possible to improve the productivity. So I think this is what we are doing specifically. In the future, there could be more models, business models can emerge, but this is our first step in that direction.
Okay, great. The other thing I also wanted to understand was your revenue from Asia, Kishore, has declined around 8%. Could you share with us reasons for that? And also which geography looks more promising in the coming quarters now?
Yeah. So, I mean, Japan, if you look at the year-on-year numbers, it has done outstanding for last many years, 3 years or so. So, our growth on year-on-year basis is more than 40%. So, yes, I think for a quarter or so, it may not deliver what it delivered in the past, but there are many things which we are doing. One is in the existing markets where we are established, like Japan, but also our focus on India and China, that will bring us some revenue. And as you might have seen, I mean, we work with India is a good focus for us. We work with most of the OEMs. And we are also committed to really build an ecosystem for India, because we believe over the period, Indian auto industry can be very competitive, and we would like to contribute to that. So we work with all the OEMs, and recently we, announced also one such thing with JSW. So I think India, as well as certain revenues from China, will help us in addition to our established market in the Asia.
All right. With this, we let you go on that, Mr. Patil. Thank you so much for taking